Hello, everyone. My name is Peter Lang. I am the founder of the Designer CPA, and I want to thank you so much for your patience while we deal with technical issues. We were just saying how great technology is until it doesn't work, right? So hopefully everyone can hear me now and see my screen. Today we are going to present to you a presentation entitled The Steps Designers Should Take to Avoid Accounting Nightmares. My name is Peter Lang. I'm a CPA. I'm the CEO and founder of the Designer CPA. And you can see some of the contact information. So I just want to preface by saying that in the amount of time we're explaining anything, if you have any detailed questions after the fact, anything that I'm saying, please don't hesitate to send me an email, and I will gladly try to help in any way that I can. Okay, so let's talk about the agenda or some of the topics that we're going to be talking about today. The first topic is the different types of business structures and how the decision that you can make can save you thousands of taxes potentially annually. Another thing we're going to talk about, the questions you should ask to confirm that you have chosen the right CPA or accountant for your design business. That's very important. We're also going to talk about the basic information that you need to review with your finance team, even if you hate numbers. And also we're going to talk briefly about how to set up Ivy for sales tax purposes so that when you have to report sales tax, it's a breeze. Okay, so I don't want to get too complicated, but I wanted to go over some of the different business structures that you can set up as a business. So if you're just starting out and you're the only owner, most people start out as a sole proprietor. It's the most common structure for designers who are just starting out their business. So some of the pros is it's the easiest form to set up. And some of the no protection against personal assets, and all of your profits are subject to an additional self-employment tax rate, which is 15%, 15.3%, which is a flat rate for everyone. Another thing that I like to say that's not on this, that I wanted to make sure that I let everyone know, is when you start your business and you may be, even if you're doing work for a company, or you're dealing with vendors where you're buying and selling things, a lot of times they're going to give you a W-9 to fill out, which is, if you don't know what a W-9 is, it's basically just a form that has your information on it, and they're looking for a tax ID number. So a lot of times, if people are starting out and they say, like right now, I'm just kind of seeing what happens and I want to make sure that I stay as a sole proprietor, I always tell them that the first thing that they should do is apply for a federal ID number. And you can do that for free on the IRS website. They ask a couple of questions, but so if you do have an accountant, you want to make sure that you're working with them to answer the questions correctly. But this is a totally free service, and it gets your business a federal EIN number. And the reason why you want to do that is the alternative is your social security number. And in our day and age of identity theft, you want to limit the amount of things that you give your social security number out to. So this is a quick and easy way to get a federal EIN number. It also open a bank account, because if you're trying to open a business account, they're going to need that, and it also protects your social security number, which is great. Another form which is very similar to the sole proprietor is a partnership, and all the difference is between that is that sole proprietor, it's more than one owner, where the sole proprietor is only one owner. Another option is the S corporation. The S corporation is a separate entity that has one or more shareholders, owners, and directors required tax return in addition to your personal return. So some of the benefits of becoming an S corporation is you're paying yourself a reasonable salary through a W-2, like you are the owner of the company, but you're also an employee. And a reasonable salary, what we do there is we can limit the self-employment tax rate. So instead of having to pay self-employment tax on all of your profits, you're coming up with a reasonable salary, and you're reducing that so that we can save taxes every year. Some of the cons is only common stock can be issued, preferred stock is not allowed, and you can't have more than 100 shareholders. So as long as you plan on having less than 100 owners, it's a great benefit that if you're in the right situation, can potentially save you thousands of dollars in taxes. So I'd like to talk about this. This is an overall general example. I preface this by saying that every person has a unique situation. Every business has a unique situation. But I just wanted to kind of go over a brief example of what I'm talking about when I say you can save taxes. So right now I'm looking at if your profit exceeds $40,000. So profit is the amount that you have left over after you've paid all of your expenses from the amount that has come in. If you're looking at that and you're seeing a number higher than 40,000 and you think your business is going to continue to grow, then that now is a good time to start thinking about being an S corporation. You can save money by determining a reasonable salary, which we already talked about. So for example, a sole proprietor is in her second year of business and she's projecting an annual profit of 80,000 this year. So knowing this election, she elects to be considered an S corp for tax purposes, and she determines a reasonable salary of 50,000 per year. And basically what that means is the $30,000 difference between the two is not subject to self-employment tax anymore, and it's saving the business about $4,500 in taxes. The other thing I want to say is this isn't a one-time thing. So even if they reach that $80,000 profit and your business stays consistent at an $80,000 profit, you'd be saving $4,500 a year. So as you can see, this is a great an easy thing to do once you get to a certain level that we haven't even really done any tax planning, right? We're just trying to save you as much money as we can using this technique with reasonable salary. Okay, so maybe you've heard what I just said and you're saying, oh, what if I realize that my business is not structured correctly? So I always say, if you just realize that maybe there's a more advantageous structure that you could use that's going to save you money, don't worry about it. Don't freak out. You can change the structure at any time with the IRS. So if you have a good accountant and you think that it should be different, you don't have to wait till next year. There are ways that you can change it and even maybe make it retroactive for the first of the year that you're in. And I always say, so each business is unique. So you should consult with your attorney and your CPA and make sure that all three of you are on the same page to confirm that your business is structured correctly. The other thing I wanted to kind of briefly say is a lot of times people will ask me if they should be an LLC. And an LLC, that part, so you could be an LLC and be structured in any one of the entities I just went through. So you're LLC with the state, but the IRS, you're choosing how you want to be taxed with the IRS. So I always say that hiring a good attorney, if you're starting your business, hiring a good attorney and having them explain the legal ramifications of being an LLC versus incorporated, it's a good investment, just so that you know that you've chosen the right one for your unique business needs. Okay. Our next topic is one that we're going to go over what the best questions to ask your current or potential new CPA. So if you're just starting out and you're thinking about hiring an accountant, a bookkeeper, a CPA, or if you currently have one and you're not really sure if you're getting the best value with that person, these are some questions that you can ask, and your CPA should be able to answer them. I always say that if you find that you're asking them and you're not getting the right answers, ask them again, because these questions aren't too terribly complex. They're more a way of having a conversation so that you know that your accountant you're currently working with is working in your best interest. You guys are on the same page and you're both working to grow your business so you can make more money and be happy. The first question is, what designers do you currently work with? So you need to determine how important it is for you as a business owner to have a CPA that specializes in the design industry. So we all know that the design industry is a very unique industry. The accounting rules and the projects, the way it works is not like most industries. So it's okay if you have a accountant that doesn't have any other designers to work with, as long as they're willing to take the time and learn and listen about the uniqueness of the industry and make sure that they are doing it right. Instead of saying, this is how we do it, this is how we do it for all our clients, they need to make sure that they're putting in the research and knowing that they are making decisions for you that's in your best interest. Another question is, have you ever heard of Ivy? Can you tell me about your experience working with Ivy and QuickBooks Online? So the beauty with Ivy and QuickBooks Online is they're cloud-based accounting programs and project management programs on the internet. So with this day and age of having projects everywhere and maybe you're traveling all the time, you and your accountant can still access that information at the same time and go over things, and it gives us the ability to communicate, solve problems quicker. So I always tell people when they're looking for someone, it would be nice if they've heard of the programs that you use and they're comfortable with it so they can give you the best value. Another one is, describe your relationships with bookkeepers who work with your design clients. Tip, listen closely to this answer. Is the potential candidate positive, or do they start to complain about having to fix everything because the bookkeeper doesn't know anything? So if you have a bookkeeper, let's say you're in a position where you have a bookkeeper that you trust, that you know has design clients, they understand the industry, they do a good job for you, and now you're looking to take the next step in hiring a CPA, you want to find a CPA who either already works in the design industry, maybe specializes in the design industry, has a ton of clients in the design industry, understands that, and it also understands what the bookkeeper is doing, and they're willing to communicate throughout the year and be on the same page as everyone. I'll give you an example that I've seen. I've heard of other accountants that kind of go in and tell the bookkeeper how to do things, and this is how it's going to be, and they don't really understand the design industry, and there's a lot of clashing that goes on, and you're not getting the best value in that. You want to make sure that your CPA understands the reports, has a good relationship with your bookkeeper, and can give you solid advice based on your unique business. Okay, how often do you typically meet with your clients? Okay, you're looking for a minimum of 2 times a year with this question. If your client, if they're saying that they meet once a year, I don't think that that's valuable enough for you. We have a minimum in my business where we typically want to meet with our clients at least 4 times a year, and what that does is it's a check-in. You get to see how your business is doing. Are you growing like crazy? Are you having a slow time? And then that also allows them to do some tax planning and adjusting things accordingly, so that you're paying enough taxes in, you're doing everything that you're supposed to, and then you're just worrying about designing great projects for your clients. And the accountant is worrying about making sure everything's paid and all set. Another question is, how do you charge? So you can ask the accountant, how do you charge? Do you give a fixed price agreement throughout in the beginning of the year, or is it something that they're budgeting for and they say they're not really sure and they bill by hours? So this is an important question to know how you're going to be invoiced for budget and future cash flow issues. If they say that they bill by the hour and they're not really sure how much is it going to cost, that's more of an old school traditional way, I think, and that can get you into trouble with figuring out, like, you could get a surprise bill. So even if they say they charge hourly, I would say, like, can they come up with an estimate for you or a budget for you so that you know how much money you're going to need to pay the bill versus getting a surprise. Finally, remember, you are in charge. You are the one that's paying the bill. So if you don't feel comfortable, ask questions and make sure you get an answer that helps you understand. And if you ask a question and you don't get an answer that helps you understand, ask it again, or just say, I don't understand. And hopefully your accountant, you feel comfortable, they have patience, and you guys build a trusting relationship that allows you to grow, because at the end of the day, it's all about you, the client. What if you don't like the answers that you're getting? You're going to keep interviewing potential clients until you feel comfortable with the individual that you pick. Have the courage to find the perfect teammate. So some people will say to me, well, I've had the accountant forever, and even though I don't feel like he understands my business, at least return. I know change is hard. It's hard for me when there are people that truly care and want to see you grow. So the right accountant will answer your questions with patience and clarity, be willing to meet at least once a year. If they can't find the time to meet with you more than once a year, they're not a team member that is in the best interest of your business, for your business to grow. I truly believe that. They also will have a clear answer on how they bill. It depends. Then maybe for cash, you may be in for cash flow surprises during the relationship. Another topic I wanted to talk about, the non-negotiable financial information you can't afford to ignore. So I have a lot of clients that are interior designers, and they say, I like the creativity. I don't really like the business side, the financial side. Can you just handle everything? And I said, I can handle most, but there are certain things that I can't give you the most value unless you pay attention to these things. So these are just a couple of examples. The balance sheet, what is it? It's a current snapshot of the company's assets and liabilities. So assets, all the valuable items that you have, the liabilities, how much you owe to your vendors. Why you can't afford to ignore it? You may be working just to pay off debt. So if your liabilities are higher than your assets and you haven't come up with a plan to reverse that, you might be working just to pay off debt. Another report is the profit and loss report. It shows your profit, or it is what's left over after all the bills are paid from the cash that came into the business. Why you can't afford to ignore it. Is your business just a hobby, or are you actually making money? This report will it's a good snapshot to show you exactly how much your profit is. And in QuickBooks Online, you can customize it, whether you want to look at a month or a quarter or a year, and you can also look at it comparatively towards last year. So this one will show you all of your income and expense items so that you can tell what your profit is for a customized period of time. Two more examples, accounts receivable summary. That's another report you can find. What is it? It's a list of customers that still owe the business money, your customers, and why you can't afford to ignore it. You didn't get into business to be someone's bank. The longer it takes to get paid by your customers, the longer your businesses can't grow. So if you're invoicing clients and you're waiting to get paid, the longer you get paid, the longer you have to wait to be able to get money to either pay off your vendors or invest in other things to get it to grow. So this report will tell you how long the customer has had since the invoice date since they haven't paid you. And you need to find someone who can either email or call your customers and just check in with them and make sure that they got the bill, they got the invoice, and just figure out when it is you're going to get paid. You want to make sure that the number of days you're waiting to get paid is as low as possible, obviously, so that you get paid quicker, you can pay your vendors, and you can move on and use that money either to pay yourself or to invest in the business and have it grow. The accounts payable summary is just like the accounts receivable summary, except it's a list of vendors that you owe money to and why you can't afford to ignore it. If you don't pay your bills, the vendors will stop selling goods and services to you, and your projects are going to get delayed. So this is a really important report so that your vendors, your account with vendors stays active and open. You're keeping everyone happy, and you know, when that next project comes, you're not going to have any issues with when you start ordering for your client. A couple more: cash flow statement. Why you can't afford it. This shows cash is king. So there is more to the story than just the profit and loss statement. This will show you how much cash actually either came in during a time period or came out. So obviously you want a positive number here, and it gives you more detail than that profit and loss statement. The sales tax statement, we'll talk about that briefly, but that is going to show you the total of the invoices and corresponding sales tax amount that were paid by customers during a specific period of time. Why you can't afford it: if you ignore sales tax issues and you don't pay your sales tax liabilities to the jurisdictions that you have projects in, you're going to lose your resale certificate and your business is going to suffer. You're going to pay penalties and interest on any sales tax that's due, and quite frankly, you don't want to get in trouble with the jurisdictions. So Ivy has a great sales tax report that's simple to look at and very easy to follow, so that when it comes time to file your sales tax, it's super easy and hopefully not that big of a deal. So the last thing is what we can go over is how to set up sales tax in Ivy. So sales tax reporting is a breeze. Just a couple of other things based on what I just said. But so in Ivy, when you set up sales tax for a new client, you want to select the state and the jurisdiction that the project is actually located in. So it's not technically where your office location is, it's where the project is located, and that's really important. If you have a CPA, you can confirm with your CPA what the rate is for where the project location is, or you can look it up online. And you want to make sure you're inputting the correct agency name where you will remit your sales tax in Ivy. And then once the initial setup is done, you can customize a sales tax report based on the dates that you need. So some people have to file sales tax monthly based on their jurisdiction or quarterly. So it's basically based on that, but they allow you to custom put the dates in based on your unique reporting needs. Ivy will produce an easy to read report that gives you all the information you need to file your sales tax report accurately. And then just some final takeaways. With programs like Ivy and QuickBooks Online, design business owners no longer have to be afraid of the financial aspect of their business. These programs are, like I said, super cool and allows you to access your information no matter where a project takes you. And you can have up-to-date information no matter where you are. Also, you should have complete trust and confidence in your CPA. And if you don't, if it's something that in your gut right now, you're like, you know what, I don't, you do have the tools to find the advisor that wants to see your business grow. There are good accountants out there that will help you succeed. So if you have someone that in your gut you don't feel is the right one, there is someone out there. No matter how much you trust your accountant, you have an obligation to review certain financial information for your business. You are an entrepreneur and you cannot achieve your goals if you ignore your finances. I always tell my clients I can give them a lot of value and I can provide for their needs, but they also have to pay attention to some of those non-negotiable things in order for us in order for me to truly help them, there are certain things that you do have to pay attention to. And also, finally, do not be afraid to ask any questions, to ask questions. There's no such thing as a stupid question. If you ask a question and you feel like you got an answer and you still don't understand, ask it again or ask in a different way. And you should be able to get the answer that you deserve, because at the end of the day, you are the one that's paying the bill. So finally, thank you so much for listening to my presentation today. Here's some contact information that you can, if you have any questions after this or in the days ahead, something that came up, feel free to just send me an email, and I will be happy to try to help answer questions in any way. Thank you.